Welcome everyone to today's session on the 2018 Hedge Fund Compensation Report. We have a lot to cover, so I'm just going to dive right into it. First off, from a methodology perspective, we have set out over the last decade to create an accurate and affordable industry benchmark. We each year survey hundreds of fund managers and employees, and they represent firms both large and small, with the vast majority of them coming from North America, more specifically the US. Now, we don't have time to cover everything in today's session, so I will say that the full report answers these questions and more. What are the comp medians and ranges? Which titles earn the most and how? Who shares in the upside and at what level? And how does fund size affect pay? How does fund performance affect bonuses? And what's the impact of hours worked on compensation? These are just some, like I said, some of the questions that get answered in the full report. And what we're going to do is we'll give you a sneak preview today of some of the information. And at the end, I'll let you know how you can purchase the full report to get all the detail. Okay, let's start off just with year over year. What were the expected changes in compensation? So as you can see, just based on what's been happening in the industry and the stronger hedge fund performance, it really hasn't fueled a universal optimism for increase in total compensation. In fact, over half expect higher earnings this year, and that's about what it was last year as well. And considering the strength of the industry's overall performance, you can see here that you still have a large portion of the respondents saying they're going to make less or equal to what they made last year. So 27% said same, 16% said they're actually going to make a little bit less. The three primary drivers in the compensation formula include experience, fund performance, and the size of the fund. And you've got to keep in mind, bigger is not necessarily better when we talk about the size of the fund. Although the industry is often referred to as a meritocracy, there is an absolute disconnect between the individual performance and fund performance. And one thing to keep in mind is common titles such as analyst, director, even risk manager can and do mean very different things to different firms. And this is especially true at smaller firms, where each person tends to wear more hats than their larger firm counterparts. Now, we're going to get into some of the bonus calculation details in just a bit, but I thought it was important just to lay these out. Last year, 60% of respondents expected earnings above $200,000. This year, 65% of respondents are anticipating that same level. And of course, this sort of lines up with hedge fund performance over the past year. So what about the stories of hedge fund professionals making tens of millions, hundreds of millions, and perhaps even billions with the B? Look, those are the unicorns in the hedge fund industry. They're talked about often, but they are rarely seen. What you see here is a much more accurate representation of what the typical hedge fund industry professional is earning. In terms of the fund profiles of those who responded to this year's compensation survey, here's the size of the fund. And you can see it's fairly evenly split. So we've got some in small funds, less than 100 million at 22%, and 32%, almost a third, are more than $1 billion. And of course, two other ranges, again, fairly evenly split. We find that there's a great deal of consistency in terms of the size of the firm based on the number of employees year over year. This year, about 69% had 99 or fewer employees, and 31% had a staff of 100 and more employees. So you can look at this chart and see where your firm falls on this chart, but it also gives you a good sense of what was the makeup of those who responded. Although not the only demographic slice that we have in the report, here we take a look at the compensation level by firm size of number of employees. And here you can see the highest paid employees are in group sizes of 11 to 49. And there's really not a great deal of difference from the 50 to 100 or more groups. And those in groups of 10 or less tend to make less than their peers in the larger groups. We also take a look at compensation by country. Now, this is an interesting chart because what we see is that the difference in pay between the US and the UK widened slightly this year. And we also saw that there was a drop in the compensation for those who are working in Hong Kong. There are huge disparities, as you can see, in terms of bonus pay, where the UK has a pronounced advantage over the US and Hong Kong. Hedge fund professionals in the UK earned double the bonus pay of their colleagues in Hong Kong and approximately about 25% more than their counterparts in the US. This year, 83% of the respondents expected positive results from their fund performance, up 11% over last year. This percentage of firms expecting annual gains has been in decline since 2013. This year marks a reversal in that trend. Firms with performance of 25% or more is up by about 4 percentage points over last year. So let's talk about bonuses by fund performance. And we'll talk about those funds that are down in just a second. But from the even all the way up to the north of 25% returns, you can see there's a fairly even curve there, a fairly predictable curve. Now, this is different than what we've seen over the years. In fact, over the past 5 years or so, there's really been a disconnect in terms of tying these two together. Now, that said, you can also see that even those funds that were down were paying higher bonuses than the firms that were at even. Now, how could that be? Why would that be? Well, it's really about how the bonus is calculated. So you can see that 69% of respondents say that their bonus is based on a combination of factors. And then you've got some specifics, 11% saying it's based on firm performance, 10% saying individual performance, which is oftentimes difficult to measure, 9% fund performance, and 1% said, I don't get a bonus at all. So it is this 69% that's really swinging that. So even though the fund might not be performing as well, perhaps they were talent in demand and they were hired on with a certain level of guaranteed bonus while they were ramping up the fund, for instance. So then that's where you start to see the disconnect. And in terms of compensation and the percentage of cash compensation that is made up from bonus, you can clearly see that those that made more than $1 million, that their bonus is making up the vast majority of that. And in fact, bonus really starts to kick in as a larger percentage in the 250 to 300 range, but especially 300,000 in US dollars or more. That's where bonus plays an even bigger role. And if you make more than $500,000, you know that that bonus is going to make up more than half of your cash compensation. And the opposite is true, of course, at the lower levels as well. And what about bonus guarantees, right? 8 out of 10 hedge fund professionals say their bonus is not guaranteed. But there is 7% who say 100% of their bonus is guaranteed. Now, that said, those with a guaranteed bonus very likely have to take some portion of that bonus and reinvest it back into the fund. That's part of the bonus agreement. So even that 100% guarantee might not be all it's cracked up to be here or all it looks like on the surface. Now, from an equity participation perspective, what we see here is when we look at the amount of hedge fund experience, so not just total work experience, but the amount of work experience within the hedge fund industry, you can see there's a very steep curve that goes into the 10, 15, 16 years in hedge funds that ties to their participation. No doubt, the further you are along that curve, the more likely you were the founder of the firm or one of the founding partners in that firm. And then, of course, more than 20 years, it's a little bit of an anomaly. It drops off there. But the vast majority of people do not have more than 20 years of hedge fund experience. They might have that much work experience, but typically they don't have that much hedge fund experience. We also ask people about their satisfaction with their pay. And you can see here that 60% are unsatisfied with their pay. Now, we've been doing this long enough that we know. So for over a decade, we've been doing this. And what we know is that when the industry is performing well, the grass is greener on the other side. And so people start to think about, well, what could they be making if they went to another firm? Just the opposite is true, right? When the industry is not doing well, all of a sudden they become much more satisfied with their current position, their current pay level, because they're just happy to be employed and earning decent income. And we also take a look at pay satisfaction specifically by title here. And so what's interesting is that the most satisfied is the founder, of course, right? That seems to make sense. They're the most satisfied with their pay, but they're not the highest paid individuals on this chart. So you got chief investment officers, managing directors, partners, and principals, all who tend to make more money than the founders of those who participate in the compensation survey. However, they're less satisfied. And as you work your way down that list, you've got the traders, the VPs, portfolio managers, and senior associates being the least satisfied. So if you're running a firm and you've got senior associates, just know they may already have one foot out the door because of their dissatisfaction with the pay. So what about MBAs and hedge fund? It's not talked about that often. What role does an MBA play? Well, as you can see here from this pie chart, they play all sorts of roles. And yes, they can play some of the top roles in the firm, except they occupy roles across the board as analysts, as CFOs, as portfolio managers, vice presidents. They play all these roles within the organization. And we find that having an MBA in the hedge fund industry really is not much of an advantage in terms of cash compensation as well as equity sharing. Now, like I said, we don't have enough time today to go through everything that's in the report. In fact, we have 50 different figures, charts and graphs, tables that are in the report. And this is just so you could take a look at some of the things that are out there. In the full report, we talk about compensation by job title, last year versus this year. So you can see the changes that people were reporting. We obviously have the tables that talk about mean compensation in terms of base, bonus, and total. We also break that down by percentile. And we look at mean and bonus pay by the fund size as well. So we broke it out into less than 100 million, 100 million to $1 billion, or more than $1 billion. And again, we break out base pay as well as bonus. So if you're interested in getting more detail on the hedge fund industry compensation benchmarks, I invite you to go to hedgefundcompensationreport.com, and there you can buy the report and download it instantly in PDF format. All right, well, thank you, everybody. Hopefully you found these hedge fund compensation insights interesting, and hopefully they will help you as you are either negotiating your own compensation or perhaps even setting the benchmarks for your firm. Thank you.